Hi guys, Oleg Tkach here with your weekly rate update. And what a wild week we had with the Fed coming out this week, talking with the jobs report that we just had that came out today. And there's just so much going on in the market right now, and a lot of stuff doesn't make sense to a lot of people. So I'm going to try to make sense of what happened this week, what's moving the markets, and so forth. So first off, it started off with the Fed getting together and Jerome Powell speaking, and pretty much what he did is he said that based on the recent reports, the Fed is surprised how good the economy is doing, specifically the job market, and that they might have to change their stance on rates. They said that they might have to go more aggressive. It all depends on the data that's going to come out, the future jobs report, and so forth, and that they're really looking at it and they're kind of rethinking their overall rate strategy. They might have to hike them faster for a longer period of time. So that kind of shocked the markets, and we saw rates pretty much Wednesday go into the sevens, low sevens. Now, with that said, all eyes were on the jobs report this week, which came out today. And the jobs report came out strong, which is not good. Therefore, even though we had a strong jobs report, rates actually came down today by about 0.25% and went it back into the high sixes again, which in theory, shouldn't have happened, but it did happen because investors are looking at it from a standpoint of, well, the jobs report isn't as strong. Now, with that said, again, what's next? Well, next week we have our CPI report. Why is that important? It's important because that is kind of the next big set of data that's coming out that's going to really impact what the Fed's going to do at the meeting at the end of the month. Why does the Fed meeting matter so much? Because there's the whole debate on, is the Fed going to hike by 0.25 or are they going to hike by 0.5? Now, while in theory that's not that big of a difference, however, why does it matter so much? It matters because it solidifies the Fed's stance on future rate hikes, meaning that if they're going to go 0.5, it just shows that they are going to go more aggressive for a longer period of time, which means higher rates for longer versus what we saw in the beginning of this year with positive inflation reports, which then the Fed said we're doing well and everything's working and we don't have to go as aggressive. So the 0.25 would signal more of the Fed taking it easy versus the Fed going harder for a longer period of time. And that is why the market's been so volatile. That's why it's been all over the place. That's why one day you hear rates are up, next day you hear rates are down. That is us making sense of what happened this week, which was really data-packed, a lot of comments, but ultimately ended it on a positive note. So next week, that CPI report that comes out on Tuesday, definitely going to have one of the biggest impacts on rates. We hope that, of course, rates are going to come down a little bit from the highs that we've seen. However, we'll keep you updated as things progress. If there's anything we could do for you, let us know. Otherwise, we hope you have a great rest of your week.